Good evening. Welcome to the City Council of Greenfield Ways and Means Committee. This is March 16th, 2021, and the meeting is called to order at 5:26. No, 5:36, excuse me. The chair statement is as follows. This meeting is being recorded by the Ways and Means Committee. If any other persons present are doing the same, you must notify the chairperson at this time. Is anybody out there recording? We're recording our own. I got that. We're good. Okay, can we have a roll call? Councillor Bottomley, please, would you take the roll call?
Yes. Councillor DeSorger.
Present.
Councillor Forgy.
Here.
Councillor Jarvis.
Here.
Councillor Mayo.
Yes.
And I'm Councillor Bottomley, present.
Thank you very much. I appreciate it. We have a quorum. I also wanted to note that we have other members with us. We have the mayor. Welcome, Mayor. We also have representatives from the auditing firm. That would be Frank Surrett, is that correct? And Katie Casey, and they will be joining us shortly to help us understand the 2019 audit. We also have MJ Adams from the town, Marlo Warner from the town, Eric Turog from the town, Liz Gilman from the town or city, whichever you'd like to call it. And I hope I didn't miss anybody, but if I did, please shout out. All right, we need an approval of minutes for February 16, 2021.
So moved, Jarvis.
Second, Mayo.
Okay. All in favor?
Aye.
Aye.
Raise your hand and indicate aye.
Aye.
Aye. Everybody? Okay. The minutes are approved. Thank you. We have no public hearing tonight. I am looking for a motion, please, to suspend the rules of procedure. This would be rules of procedure 8, order and disposition of business.
So moved, Jarvis.
Second, Bottomley.
Second, Mayo.
Okay. Thank you very much. This is for the purpose of moving the 2019 audit review item, which is under our discussion, to a first discussion on our agenda. So I would ask our representatives from the auditing firm to please, the floor is yours. If you could introduce yourselves, give us a tiny description of your business, where you're out of, what your association with the City of Greenfield has been, and just give us a general overview of how you felt this audit went. We'd appreciate that. And then I'm going to open up the floor for discussion so that councilors can ask you questions that they might have about the audit. So welcome and thank you very much for joining us.
Well, thank you very much for having us. Katie, do you want to introduce yourself first?
Sure. I'm Katie Casey. I was the supervisor on the audit for the 19 audit as well as the 20. And I've been with Powers & Sullivan for about 16 years now.
Katie works very closely with Liz to coordinate the information that we need for the audit, also oversees the staff assigned to the engagement, and does a lot of the work too related to the audit work and the preparation of the reports and all of that. So she's really, really involved in the whole process, a very important part of our team. I've been with Powers & Sullivan for 26 years. I'm a partner with Powers & Sullivan. We're an audit firm that has always specialized in audits of municipal governments. We audit cities, towns, school districts, retirement systems, some sewer districts, water districts, you name it, any type of like local government type entity. We've audited most of them, if not every type. But that's really our specialty. That's where our focus is. As far as Greenfield, the 2019 audit was our first year auditing the city of Greenfield. The audit contract was awarded to us kind of late in the year, and the field work was actually scheduled to begin in March of 2020. And that was happened to be right around the time when COVID hit. And so it really kind of changed our audit plan from what we typically do is spend a considerable amount of time out in your offices gathering information and asking questions, and it's just kind of the way we had always done things. And with COVID, that obviously changed to a remote process. And fortunately, as a firm, we've invested a lot of money in technology. We have a secure portal that we use to transfer data between our clients and ourselves. And our systems are all in the cloud, so we have no problems working remotely, whether we're working from our office or home or anything like that. We have scanning capabilities and everything we really needed to be able to do to be successful. And so probably our biggest challenge going remote was, working with our clients to, figure out how we were going to be able to get the information that we needed to be able to do the audit and get all of our questions answered. And it really required us to leverage a lot of the technology that we had, including, these forms of communication, Zoom meetings and phone calls and emails and everything, really. And what we found was that we had a really good partner in Greenfield in terms of getting all this done. They were very open and also very equipped to be able to get us the information that we needed. We send out checklists, making like an initial request of kind of the basic things that we need, things that we know we're going to need, and then there's additional information and questions that come up as we go through the information. And I just want to say thank you to the mayor and to the finance director and to the city auditor, the treasurer, collector, and the rest of the finance team, because we really had very, very good cooperation from everybody from our standpoint. And the situation and circumstances that we were all under, it couldn't have gone any better from our standpoint. I mean, it still went very smooth. We had no issues getting the information that we needed, so that was really great. And we appreciate all the time and effort that everybody put in to make that happen. It really was kind of a group effort, I would say. So with all that being said, the audit, some of the things that we look at internal controls. Some of the more important controls relate to cash and receivables. The reconciliation process is really critical, and we always look very closely at that. And what we found is that the cash and the receivables were all reconciled for each month of the year, and those reconciliations were provided to us. We reviewed them. We found them to be complete and accurate, so it looks like you have good reconciliation processes in place, which is, like I said, one of the most important controls over the cash and the receivables. So that was really great to see. The main assets and liabilities that we're auditing and focus on, some of the most critical areas are cash and investments, capital assets, your net pension liability, your net OPEB liability, your debt, and your compensated absences. Those are probably some of the most significant assets and liabilities that you'll see on the balance sheet. There's some other receivables and so forth, but we audit those in great detail. We look at all, gather all the supporting documentation, make sure that test census data for your OPEB and your pension. We actually go back to the files that are used by the actuary to calculate the liability, and we verify that the census data that they're working off is correct. We actually trace it to the personnel files and to the supporting documentation and personnel and the retiree files. That's a big part of the testing that's done for pension and OPEB. For the capital assets, we look at your policies, your procedures, what your thresholds are, what your useful lives are. And then we also take a look at the additions that you've recorded, and then we do our own review of the ledger to make sure that there was nothing material that was missed. The city has a good process in place for capitalizing its fixed assets. Right now, that information is maintained on a spreadsheet. Something to consider in the future is maybe going over to like a fixed asset software. There's some cheap alternatives out there that can make that process a little bit easier. The Excel schedules can be, if you have strong Excel skills, they work well. But if you try to pass it off to someone who doesn't have as strong skills, then you can start to have issues with the schedules. So that's something to maybe consider. Certainly not any type of an issue or anything like that right now, but something as a suggestion for potential improvement down the road. We also test transactions. We test 25 transactions in each of the payroll, the expenditure, the revenue, the journal entry transaction cycles. And what we found when we looked at those transactions is that there was proper supporting documentation, proper approvals. We found deposits being made on a timely basis. And we found that the checks and balances that you would expect to be there were in place, and transactions were coded properly. We didn't find transactions that were in wrong accounts or anything like that. Overall, based on all that testing that we did, we found that those transactions were reported properly, which, suggests that, if the rest of the population follows that sample, that your books and records are being kept and recorded properly, and they're being kept on a strong footing just from recording things properly and having all your proper documentation. To get into the financial highlights, I just thought I'd talk a little bit about your fund balances. The general fund balance is usually something that we focus on. Your general fund balance total $12.5 million. That's on the fund-based financial statements. If you have the reports in front of you, if you wanted to flip to page 16, that's the fund-based balance sheet. So there's governmental financial statements can be a little confusing. In the back, there's a budget to actual schedule, which is a budgetary basis of accounting. There's these schedules in the middle of the report. These are considered to be governmental funds. This is your general fund, your special revenue funds, capital projects. And this is considered to be a fund-based statement, which is on a modified accrual basis of accounting. It's a near-term focus, meaning it doesn't include your long-term assets and your long-term liabilities, such as capital assets, or your net pension liability, or your net OPEB liability, your long-term debt. It's all near-term, almost like a cash basis, but there are some receivables in there. But this is where the fund balance number is coming from. If you look at the first column and down, second number from the bottom is your total fund balance for the general fund. Now, this schedule includes the stabilization funds in the general fund column. That's required by GAAP. So that's important to know. But there's a total fund balance of $4.5 million. And right above that, you'll notice that there's $789,000 of fund balance that has been reported as committed. And what that's made up of is your stabilization funds, the building maintenance, capital, contractual agreement, and your special education stabilization fund. And then the other amount that makes that up is free cash that was voted for your FY20 budget. So that's your committed amount of $789,000. Right in between those two numbers, you'll see $78,000 that's assigned. And that's just represents encumbrances, year-end encumbrances to be paid in FY20, because we're looking at FY19 here. And so that leaves you with $3.6 million of unassigned fund balance. And of that, $1.7 million is your general fund balance, and $1.9 is your general stabilization fund balance. That balance of $3.6 million in total, it represents about 6.3% of your budget. The rating agencies consider, that balance to be adequate, an adequate reserve. However, when you really look at it, it's actually less than 1/12 of your budget. And when we talk about this, sometimes we kind of think about our own personal finances and how much we think is like adequate for personal finances. And, you know, the general kind of rule of thumb is that you should have at least 3 months worth of saving in your personal finances. You don't necessarily need that much for a government, and it's not necessarily the same thing, but it's kind of the same idea. And here with the 6.3%, as I said, that's less than 1 month's worth of reserve. So while adequate, I don't think it's excessive by any means. As a best practice, the Mass Municipal Association, they recommend that you maintain a reserve of 5% or more. So you're definitely exceeding that minimum threshold that they have. The rating agencies for AA communities, they recommend 10% or more. And then there's another organization, the Government Finance Officers Association. They recommend a reserve of no less than 2 months of operating expenditures, which would be about a 17% reserve or $9.7 million. So that's significantly higher than what you have. So there's, you know, different schools of thought out there by different agencies. Bottom line is what you have is adequate. In terms of, you know, getting a better credit rating, having more reserves never hurts. And it's good from like a financial, you know, to have that financial flexibility in case something unforeseen comes along. Your policy for free cash is to maintain free cash at 3 to 5% of your operating budget. And your free cash, make sure I get the right number here. Your free cash number for 2019, which would have been available for 20, was actually a negative balance. Now that was an unusual situation because over the last 10 years, your free cash has averaged about $1.5 million. There was some borrowing that should have occurred that didn't. And the Department of Revenue basically penalizes you if you have like capital project funds with deficits. If you don't take out a short-term note to cover that deficit, they actually reduce your free cash. And then you had a couple of other deficits like in your community development grants. You probably had about another $600,000 there. And I believe there was some other deficits in some other grants too. But if you look at, you know, your free cash at the end of 6/30/20, which is actually now posted on the DOR website, you're up to $2.9 million. And so you're back to a very healthy level, which is pretty much the max of what your policy is. Your policy is 3 to 5, 5% would be 2.9 million. So that's right where you are now at the top of that range. So you've got a good, healthy free cash position at the end of 6/30/20 that's available to be used in 2021. For the stabilization fund, your reserve policy is 5%. And I believe when the policy was written, that 5% was about $1.5 million at the time. Now it's closer to 3 million. Your stabilization fund is at 1.9 million at the end of 6/30/19, which is about 3.3% of the budget. So to get up to your 5% level, you'd have to put another $1 million in it to get to that level on your policy. And so that was really what I wanted to highlight there for your fund balance levels. And then the next section talks about your budgetary results. I can try to get through those a little bit quicker. But if you want to see those are on page 65. That's where you'll see the budget to actual report. And so this report is basically the same basis of accounting as how you keep your books. Probably one of the more meaningful schedules in this report for you. But your general fund operations resulted in a $28,000 decrease in fund balance. And so if you looked at the third column in from the right and the third number up from the bottom, that's your net change in your actual revenues and expenditures and other financing sources and uses. So you had a $28,000 loss rounding. And that is mainly due to the use of $915,000 of free cash that was used. 615,000 of that was put into the General Stabilization Fund. 100,000 was put into the OPEB Trust Fund, and $200,000 was used for the City Council Reserve Fund. So the money wasn't wasted by any means. It was put away into reserve and OPEB trust. So that to me seems like a good use of that money. Your revenues were also under budget by $138,000. And you can see that up at the top of the right-hand side of the page. You can see that your real estate and personal property taxes were $525,000 under budget. However, that revenue is 100% collectible due to the lien process, the real estate portion of it anyway. And then your collections continue to be strong at 98% of the commitment. That's a very good collection rate. Licenses and permits were also under budget by $101,000, and that was mainly due to your building permits. And those decreases were offset by surpluses in the other revenues, such as penalties and interest income. And all of those decreases that we just talked about were offset by $1.2 million of unexpended appropriations. So they basically balanced everything out. And which is why you didn't end up with that much of a deficit in your operations in total. So those are really the budgetary highlights. The unexpended appropriations, the largest ones were employee benefits. Actually, employee benefits, I'm sorry, was overspent, as well as education. And those two items were raised on the FY20 recap that you're required to raise those deficits. Just quickly on your enterprise funds, this is, you won't see these numbers in your report because these numbers are budgetary basis as well, and enterprise doesn't get presented on budgetary basis in your report, but your water fund balance totaled $837,000 at the end of the year. That was a very healthy balance. It's about 51% of the budget. And it also increased $391,000 from the prior year. So your water fund has a good, healthy balance in it. The sewer fund totaled $224,000. That was 9% of the budget. And that also increased by $92,000. And in FY19, the GSET Enterprise Fund was also established. And so the GSET Enterprise activity in FY18 was reported in a capital project fund, which was a governmental fund. And the financial statements were restated to move that activity over to the enterprise fund, which was voted and approved by the city. The fund had a year-end deficit of $80,000. It was a decrease of $221,000 from the prior year. And user charges were $201,000 under budget, and expenses were $20,000 over budget. So I don't think that was unexpected for where this is such a new operation, and just from conversations I've had with management that that it's still kind of starting up the operations, and hopefully that's going to get a little better over time. And I can't really predict what's going to happen in terms of revenues and costs and everything going forward, but hopefully they will cover their costs or at least come close to it. That takes me to the net pension liability. And your net pension liability in the 6/30/19 financials was based on a 1/1/19 actuarial valuation. The city share of the net pension liability was $49.5 million. If you want to see that, you can flip to page 71. And so this is the schedule. It's eventually going to be a 10-year schedule. It's just being developed each year since this GASB was implemented. But you can see in the third column over from the left that that's the city's proportionate share of the net pension liability. So you can see what it's done over the last several years. And so you can see that it went from 41 million up to 49 million. And that was an $8.2 million increase. And if you want to flip back now to page 67, this is a pension schedule for the system as a whole, which also includes the housing authority and the technical school. But the reason, you can see that the reason why the net pension liability went up was because of the current service cost, the current interest, and then change in assumptions, which was a change in the discount rate, which was reduced. And those are the main things that caused the increase in the liability. You also had a $1.5 million investment loss too, which had an effect on the liability as well. So those are the main factors in the increase in the liability. The system was 55% funded at the end of the year. That's a decrease of 6% from the prior year. Your current funding schedule has the system being fully funded, or the liability being fully funded by 2035. And there's a legal requirement in Massachusetts to have it fully funded by 2040. So all things being equal, you're on track to be funded by that time. And for your OPEB liability, you can take a look at that on page 75 if you'd like. You contributed $100,000 to the liability. So this again is going to be another 10-year schedule. We've got 3 years right now, and we'll keep adding years to it until we get 10 years worth of information on here. But the 63019 column, about halfway down the page, on the right-hand side, you can see that the $100,000 that was put into the trust. And the trust fund balance totaled $1,409,000, which you can see that number right near the bottom of the page. And so what this schedule does is it gives you the total OPEB liability at the top, and then it gives you your fiduciary net position at the bottom. And so that fiduciary net position, that's the money that you have set aside in the trust. And the difference between those two is the 92, 995, 394, which is your net OPEB liability. And that net OPEB liability increased by $8.5 million, again, mainly due to service cost, interest, and changes in assumptions. Your discount rate decreased from 3.87 down to 3.51. There's one other thing that I wanted to show you. I won't have you keep flipping pages too much, but if you go to page 57 for a second, there's something here that I think is important for you to see. It's called a sensitivity analysis. And so what this does is it shows you what the effect is of a 1% change in the discount rate for the OPEB liability. And also there's a chart for the 1% change in the healthcare trend rate. And they really do have a really significant impact on your net OPEB liability. And there's a significant schedule for the pension too, but pensions are pretty much at the max of what you can be for investment rate of return and discount rate. But here you can see that if you decreased your discount rate from 3.51% down to 2.51%, your liability would go up to $109 million from $92 million. And then if you increased your discount rate by 1%, the liability would go down by almost $12 million. And so the way you change that discount rate really comes down to how you're funding your trust and what your plan is to fund your trust. And I think that Liz threw out a number that the actuary had given her, saying that before you're able, like right now, you're using what's considered to be the AA municipal bond rate, the 20-year AA municipal bond rate. That's where that 3.51% comes from. And until you have enough of a balance in your trust fund to be able to support like 1 year's worth of benefits, you're going to stay at that municipal bond rate. But once you start getting above that 1 year worth of balance in the trust to be able to pay benefits, then you will start to get what's called a blended rate. And so as you build up that money, you keep getting eligible for higher and higher blended rates. And as you can see over here, if you can get your rate up 1%, that's going to knock your liability down $12 to $13 million. That's a big decrease in your liability. One of the other things that I've been seeing some of my other clients doing is establishing a policy to say that when their pension liability is fully funded, that they're going to divert either all or some of that money over to OPEB. And if they formalize that policy, the actuaries can actually factor that in to the funding schedule for the OPEB. And that can also have a pretty significant impact on the discount rate. And when you think about it, you don't have that many more years to go on your funding schedule. So anyway, I think, it's something that is probably worthwhile to talk to your actuary about. They can run different funding scenarios for you and give you an idea of, what you need to do to get that discount rate up, if that's what you want to do, and try to knock that liability down that way. And when you do that, then when you start doing your funding schedules for the lower liability, you don't have to come up with as much. Like, your required contribution is not as high if you're trying to pay down a lower liability. So that's something to consider. I mean, it's something that was brought up in the credit rating reports. That was one of the probably biggest areas, I would say, of concern that they had noted in there, was the pension and OPEB liabilities and actually funding those. And the other thing was really that they were talking about was the importance of maintaining the adequate reserves. So I just thought it'd be worth spending a couple of minutes on that. Long-term debt, you issued $10.4 million of long-term debt during the year. You had a governmental debt, you ended the year with $39 million. Water, you issued another 2.4. Water and sewer, and had 5.2 million outstanding. Your general fund debt service is at 7.6% of your total appropriations. We usually like to see it somewhere between 5 and 10%, so that seems like you're at a pretty reasonable number there with your debt ratio. And so those are really the things that I wanted to highlight in the financial statements. And the other reports that I can talk about is the report on federal awards and the management letter. If that's you'd like to hear about those, or if there are questions or anything that you want to talk about on the financials, we can do that too.
Okay, so thank you very much. What is the will of the committee? Would you like to ask questions, hear a little bit more? Anybody have any comments that they'd like to make so far? Well, I would like, I would like to ask you more of a procedural, technical question, if I may. And that is, when we receive a report and there are findings in it, does the municipality have to respond in writing back to those findings? In other words, giving you, the auditor, a plan of what they intend to do so that those findings would not, that those findings would be corrected by the next audit round?
So it depends, like there's different types of findings. There's something called a material weakness in internal control or a significant deficiency in internal control. And those are things that we're required to put in writing and to communicate with you, those charged with governance. And we didn't have anything like that. We have a management letter, it has comments in it, but there's nothing in it that rises to that level. These are more things to, areas that we think that you may be able to, improve or have some more efficiencies. And so it's more of kind of like a value-added service that we're providing. These are not things that are things that you really need to be concerned about, that you have like a weakness or a deficiency or something like that. That's not what these comments are. These are more to help you to, maybe be able to do things better in some areas, or maybe to be a little bit more efficient in some other areas. If it was a material weakness or a significant deficiency, then yes, a written response would be required, because those actually have to go in the report on federal awards, and you have to put a corrective action plan in there with that. But with the management letter, it's optional. We have some clients that do like to put them in, and we have others that choose not to. I mean, you could do your own internal corrective action plan on how you want to address them, and it's really up to the city and how you want to do that in the management letter. We're happy to put your responses in if that's what you choose to do.
Okay, thank you.
Yep.
Other questions? Anybody? Oh, Liz, go ahead.
I was just going to add that the auditors follow up on those each year, to see if we have rectified them. And I do go through that with them, what we have done. And so that's generally how they remove some of those comments. If they feel it's still important, they leave it on.
Yeah, we usually try to close the loop on them too. Like if we had it in and it was resolved, we'll usually, write in the next year, we'll keep it in there, and then we'll say what action was taken to resolve it, and then we'll pull it out the next year. That's usually how we try to do it. Sometimes when we're picking up a new client and we're assessing what the prior auditor had for findings, there might be some there that they wrote up that we don't typically make those types of comments, and we might not include those in our management letter. Unless we were asked to, we would obviously be happy to do it if it was something that a client wanted us to do. But generally, we've looked at them and determined that we really didn't think it was something that we really felt that we needed to follow up on. That we didn't feel that it was a deficiency or a weakness or something like that. But it was a comment that someone made that maybe not a comment that we're not necessarily comfortable making, for whatever the reason may be. I mean, we try to stay away from, participating in any type of management decisions. We're happy to, provide our insights and, whatever information we can, but there's a line that we can't cross when we're, and so we're careful about recommendations, that we're not making a recommendation that might come across as like a, telling management what to do, or, that type of thing. So there are certain ones that we wouldn't necessarily want to keep for multiple reasons. That could happen.
Thank you.
Yep.
Counselors, are there any more questions? Counselor Jastorga.
Thank you. That was excellent. Would you say that our style of accounting was overly conservative or more aggressive?
Your accounting, you mean like in terms of estimates, or?
Yes.
No, I would say that it's pretty conservative. We always err as auditors on the side of conservatism. And so we would, if we had a liability and there was a range, we would probably book the higher amount just to be conservative. And I think that's, I don't want to speak for, your team, but that, from our observations, that was kind of the impression that I came away with, that it's more of a conservative approach. And I would say from what I've seen with the budgeting too, that seems to be fairly conservative as well. In a good way, I think. I mean, I'm an accountant, and like I said, we err on the side of conservatism. And so for budgeting, we believe in being conservative. And if you build up reserves, we like to see reserves and have that flexibility in case, something happens, some unforeseen incident, pandemic happens or whatever, and you need some flexibility, or, you've got an unexpected capital repair that needs to be done or something like that. You don't have to necessarily go out and borrow or wonder where you're going to get the money from. We think that it's important to have those reserves just as the rating agencies do. And some of the other organizations that I meant, the Government Finance Officers Association. So, yeah, my impression is that it's pretty conservative accounting and budgeting process.
I have a couple of follow-up, if I may.
Yes, go ahead.
Okay, so you didn't find any significant deficiencies?
No.
Okay, and you did mention something before about the accounting on the CDBG funding.
Yeah.
Could you just make I saw you had a suggestion about that we
Yeah, it was really just about the timeliness that, so the way that program works is you can request that, drawing money down from the program. And usually what we see is that requests are made on at least a monthly basis. And so if you're running into a deficit in the fund, which means that you're, funding it with other available funds, that, you can request that money on a timely basis and keep that deficit to a minimum. And the way the free cash works is if you have a deficit as of June 30th and you get money in, like from a grant or something like that by September 30th, so you have 3 months that deficit would not get reduced from your free cash. And so I think it's important to, the other thing is if you wait like an entire year, it just becomes a bigger, like more cumbersome, more confusing process. I think that if you do it on a more timely basis, just like reconciling your checkbook, I think it's easier. And so, yeah, so we're just recommending a more timely drawdown of the funds on that. Try to avoid deficits. And once you start having deficits on funds, I mean, that's about $600,000. Now you're using other available funds. So now interest rates are really low right now. So you probably didn't lose much interest, but if interest rates were higher, then, there might actually be some significant interest that's lost. And all you have to do is draw the money down, and then you're not using your own cash to fund these things temporarily.
Okay. More questions? Okay. Mr. Soretti, you mentioned that you could go through the second part of a briefer part of the federal grant and the federal audit. Is that what you were alluding to before we started with questions?
Yeah, I can probably get through that in about 5 minutes.
That'd be great, because we're coming up on an hour.
So the federal awards, the report on federal awards, if you have it in front of you, that's required for entities that expend more than $750,000 of federal funds in a given year. The city expended $5.2 million of federal funds. $1.4 million relates to the workforce innovation and opportunity grants, $1.1 million for school lunch, $1.1 million for other education grants, $823,000 for community development, and $584,000 for career services grants, which are also administered through the Franklin, Hampshire Employment and Training Center. Based on all of our work, and we did actually go and work on site over at Franklin, Hampshire. We've done that for the 19 audit, and we did it for the 20 audit as well. Got to see, their operations and had a good experience over there. No findings, no question costs came out of it. All of our grant work focused on the Workforce and Innovative Opportunity Act grant, as well as your school lunch program. And we didn't have any findings or question costs. We were able to issue an unmodified opinion on those reports, which is the best you can get. And there were a couple of prior year findings, and we did follow up on those. One related to preparation of the financial statements, and what it said was that sufficient documentation wasn't provided for all of the accruals that needed to be recorded on the financial statements. And when we did the 19 audit, we didn't have any such issues getting the information that we needed. So we considered that to be resolved. And then there was another comment related to developing internal control policies and procedures for the federal awards. And a draft of that document was completed in 2019. So again, we considered that to be resolved as well. So that essentially, was a clean report with those two prior year findings being resolved and cleared. So that's really it for that report on federal awards. And then the last thing is just the management letter. I don't know if you want to go through like all the comments. There were 8 prior year comments and 2 new comments. I could go through the 2 new ones if you want, or I can go through all of them. It's completely up to you.
I have a quick question. I don't know if this is for you or if this is for Liz, but is Greenfield Housing Authority included in our audit?
No,
And that is because they don't belong to us? They're a separate financial entity?
that is a correct statement. They have their own tax ID.
And are they required by law to be audited?
It depends on the level of their federal audit. If they get that kind of funding, yeah.
Okay, great.
$750,000.
Okay, very good. Thank you. I'm sorry to interrupt. That was just one thing that jumped out at me. Thank you.
Problem. So did you want me to go through the prior year management letter comments too, or just the 2 current year ones?
How about the current?
Okay.
Yeah, let's do that.
Okay, the first one did relate to the timeliness of the community development grant drawdowns. And there were, about $600,000 worth of deficits at the end of the year. And no funds have been received on them, through August 2000. No funds received on 17 and 18 grants after August of 20. We recommended monthly requests be made, deficits not funded by 9/30 or reduction of free cash. So my understanding, just based on conversations, is that that's getting better. It's really an easy thing to correct. It's really just putting in a monthly procedure to draw down funds. This is what we do every month, is draw down funds. And so my understanding is that that's been fixed. So we haven't had a chance to dig into it yet, but we'll certainly review that in detail and make sure everything looks okay and is back on track. And then the other one was a comment related to a framework for assessing and improving cybersecurity. So cybersecurity, ransomware, payroll hacking, hacking of personal information. Municipal governments have been a huge target in that by the hackers. And we just feel that with all the different incidents that we've seen come up at our different clients, that it's important to have cyber liability insurance in place, which I believe you do. And to also have like a risk assessment done. I know some of our clients have talked about trying to do it internally. I would say most have gone outside to get like a fresh independent look, because that's one thing to, review your own work. Things tend to look good, and just having that different set of eyes can sometimes see things that you might not see yourself when you're looking at your own work. I mean, it happens to me all the time. But so that's something to consider. We've had a number of clients that have done it, and we have a number that are currently trying to consider how they're going to fund it, whether they want to do it internally or externally. I'd say most seem to be leaning to external, and just trying to come up with a plan for when they're going to do it. I think everybody kind of agrees and is aware that that is a problem, and a big problem for municipalities. So we just, want to make sure that you guys are protected, and that, you don't run into an issue where you get shut down and you aren't able to function, and you have to pay a large sum of money to get back up and going again.
Okay, thank you.
I
So
think there's
before
a
we
hand.
wrap this up, I wonder if any of the other counselors have some questions. Counselor Mayo? Counselor Mayo?
He's frozen.
Screen froze?
Yeah, he's frozen.
Okay.
Counselor Mayo? Can you hear me? Counselor Mayo? Okay, go ahead with your question. We can't hear you. Are you muted?
Here we go. Now you can hear me.
Okay, thank
Okay.
you.
So, just how much would it cost to, or can you give us an estimate as to how much it would be to secure a city like Greenfield? How much would it cost to you secure our the way that we do things and secure things? You do you have a recommendation, or is there an average for a town this size that we need to shoot for to protect our finances?
Well, we don't do that kind of work. There's some other
Okay.
some other companies out there that do it. There's one that's probably more for, actually, I could probably send Liz a couple of references, because I believe I have a couple of references that I've been able to gather up. And I would suggest contacting them, or
Yeah.
like some of your peers, maybe on a listserv or something. They could probably give you an idea of
Yeah.
what they're paying.
Go ahead, Liz. Go ahead.
Thank you. I just want to note that our IT
Thank
director just secured a grant to do this.
Excellent.
So,
Perfect timing.
yes.
Good. Excellent. Excellent. Any other questions, counselors? Last chance. All right, I'm not seeing anybody. Okay, so we're going to thank you, Mr. Ferretti, for your time, and Ms. Casey as well for being available to us to review our audit. We really appreciate it. I don't know what the bidding process is for the next round, but maybe we'll see you soon again.
We have a 3-year contract.
Oh, okay, thank you.
Yeah, so you're gonna have to see us at least one more time.
Okay, very good. So, and once again, our great thanks. We appreciate your efforts. Thank you for joining us this evening.
Oh, thank you very much for having us. It was a pleasure to meet with everybody, and look forward to seeing you soon, and hope everybody stays safe and healthy.
Absolutely.
Thank you very much.
Thank you.
Okay. Oh, yeah, yes, Ginny, go ahead.
I didn't want to ask this of the auditors because I thought this was more for Director Gilman. But when he was talking about the OPEB liability, we had a plan to put our marijuana revenues into that. Is that correct, Director Gilman?
It is correct. We have, if you want a little update, about $230,000 in the OPEB stabilization. Now, it has to get voted to be transferred to the trust, but the only way to dedicate revenue is to a stabilization. But it's still good. And so we wanted to develop a policy, which we can talk with you about, but do we want 100% of it to go to the trust? Do we want the first X to go to a trust? And so there was just a little more on the policy around it. Oh, and the rest to be used for OPEB costs. So anyway, we've been working on that policy.
Follow up if I may.
Mhm,
So
go ahead.
what we received was 230 or 280.
230 that's like, first of all, 20 was the first year of doing it. And we got about 167,000. And so far this year, we've gotten 75. But it's been, the second quarter was a banner quarter. So I'm thinking, people staying home and maybe we'll have a couple other good quarters.
That's all.
Okay, because the rules have been suspended, I'd like to, if the committee agrees with it, we do have suspended rules already, but I'd like to change the agenda so that our next order of business would be our first readings for the 2022 Mayor Capital Budget, which you'll find on page 2 in your packets. And if I could I ask Counselor DeSorga, do you want to read this? No, you're muted, Jenny. You're muted.
I'll read it for you, okay?
Okay, that would be great if you could do that.
City
Thank you.
Council first readings, fiscal year 2022 Mayor Capital Budget. Authorize 5 to 7 year lease to procure an ambulance not to exceed financed price of $295,000. Appropriate $90,000 from Fund 8402 Capital Stabilization for DPW gravel crushing costs. Appropriate $35,000 from Fund 8402 Capital Stabilization for DPW yard HVAC upgrades. Appropriate $100,000 for the sidewalk replacement program. Appropriate $100,000 for highway road program. Appropriate $145,000 for equipment and related costs for GSET expansion and customer installation. Appropriate $492,687 for the reconstruction of Sanderson Street. Appropriate $350,000 for the design and construction of a city skate park. Appropriate $500,000 for Beacon Park.
50,000.
50,000 for Beacon Park recreation upgrades. Appropriate $574,205 for sewer upgrades, repairs, and replacements for reconstruction of Sanderson Street. Appropriate $469,525 for water upgrades, repairs, and replacements for reconstruction of Sanderson Street. Appropriate $1,350,000 for the police station update and reconfiguration. Appropriate $20,000 for replacement of a water dump truck. Appropriate $25,000 for a water rate study, asset management, and emergency response. Appropriate $91,000 for wastewater treatment plant electrical upgrades. And
that's it. Thank you, Counselor DeSorga. Everybody understands that this is a first reading, so no action is necessary on it. Thank you. I just wanted to get that out of the way. Let's next go to our motions. Counselor Bottomley, would you be interested in starting us off with these motions? I just want to mention a couple of things. These are motions, so we are going to have a person make the motion. We need a second, and then there's discussion, and then we vote the motion. Before we start, I want to say that when we get to the third item on this list, the establishment of municipal pension stabilization fund, I have to recuse myself because I do receive a pension from the city of Greenfield. And Councillor Jarvis, I believe you
Yes,
are
I will. Yeah, on mute. I will also have to be recusing for that because I receive a pension.
right. So both Councillor Jarvis and myself receive pensions from the city of Greenfield, so we cannot participate in this. So I will be asking Councillor Bottomley to work to take care of this particular motion. And we have a quorum, so in order to make a recommendation, there will be 3 votes for the quorum. Okay, so Councillor Jarvis, would you like to start us off with, do you want to start us off with the motion? And we'll take them one by one, please.
Very good. In order to appropriate $16,500 to repair traffic lights, order that the sum of $16,500 be appropriated from free cash for the purpose of repairing traffic lights safety issues. Majority vote required.
Is there a second?
Second, Bottomley.
Second,
Okay. Discussion. We have,
Mayo?
oh, yes, what, I'm sorry? Doug, I'm sorry, I didn't hear you.
I was just seconding the motion.
Okay, thank you. We have a second. Thank you. We're open to discussion on this. Is there any discussion? We have heard from Director Warner about this. Your packet also has paperwork in it that gives you an explanation as to why it's necessary. So if there's any questions or anybody wants to ask anything of our DPW superintendent, now's the time to do so.
I had a question, Councillor Forgy.
Okay, Councillor DeSorger and then Councillor Jarvis.
So this sounded great to me. I just wanted to know if you had an estimate for what the unknown expense of the police detail would be and where that money might be coming from.
Director Warner, you still with us?
Yes.
Would you like to answer that?
So there was the quote was for 16,400. Most of this work is going to be done off the pavement, so off the intersection in the boxes you see at the intersection. So if anything, we may be looking to 4 to 8 hours of police detail. So that's why I requested the 16.5. But I'm not positive we're going to need any of it, but I needed a little extra in there in case we did need an officer for a few hours.
And the funds would come out of the DPW budget to pay the overtime for the police?
Well, whatever's left over in the appropriation from the quote, and then of course I'd cover the rest. We wouldn't go ahead with the repairs for a couple $100 if that's where it takes us.
Okay, thank you. Councillor Jarvis.
No, that was just my comment. I was going to point out that there was some padding in there just in case there was some overages, just in case people saw it. I figured that's what Marlo had done. I just wanted to point it out to the general public and to other counselors that the quote is from October and there might be a little bit of padding of money in there for the just in case money.
Okay. Any other questions, concerns, or comments? Okay, we have a motion and a second on the table. All in favor of this motion, please indicate by raising your hand or saying aye.
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 Okay, any opposed? Abstentions? Okay, it's a unanimous positive recommendation out to council. Okay, next, Councillor Jarvis.
We get an order to appropriate $20,000 from the water retained earnings for Millbrook Well generator. Order that the Greenfield City Council appropriate the sum of $20,000 from the water enterprise retained and earnings as a grant match for Millbrook well generation. Majority vote required.
I need a second.
Second, the Sorger.
Okay, thank you. Discussion.
I thought where we got $176,000 plus in grant, that this was a superb idea. That was my comment. And thank you for the work in writing the grants.
Yeah, if I may comment, this is a pretty big home run for our water system on the north end of town in power outages. So long time coming. It was a long process. COVID kind of slowed the process with everything going on with MEMA and FEMA. But this is a really good grant. So we're looking forward to getting the project done.
Excellent. Are we all set? Okay. All in favor of this motion, please raise your hands or say aye. Okay. Any opposed? Any abstentions? Okay, it's unanimous. Okay, Counselor Bottomley, I'm going to recuse myself. Ed Jarvis is going to recuse himself. It's up to you to lead the discussion on this motion.
So is it my understanding, essentially, I'd be taking over as chair for this one, so I can't make the motion? Is that, or can I make the motion?
A chair can make a motion, as far as I know. I don't see any reason why a chair can't.
Okay, great. I'll go ahead and make the motion. I move that the City of Greenfield create a pension stabilization fund as authorized under Mass General Law, Chapter 40, 5B, and that the City of Greenfield fund the pension stabilization with $1 million from free cash.
Second, Mayo.
And I'll open up for discussion.
Councilor Bottomley.
Yeah, Councilor DeSober.
So, this was one of the ones that's one, I'm having a little problem with this. We had $2,800,000 in free cash. It would be establishing a new fund, and we know already, I've known since January of last year what our pay down schedule is. It's a set schedule that I think everybody probably has in front of them. It definitely is getting bigger. But I read the DLS guidelines. I read everything that Director Gilman sent us. And I think that we know what the expenses are going to be. We have collected that amount of money already, and then we would be putting it in there. And we know that this year we're going to have to spend, I think, like 5 million something towards this. So we would be putting it in there and then collecting it again. So for those reasons, and also because I did read what she said, but it did say that if we knew what the expense was going to be, like you put things in capital stabilization and you don't know it's going to be like one water pumper truck or water, whatever that truck was that we're going to talk about in a minute. That's a one-time thing that comes up. This isn't. This is something that's going to be there all the time. And I also think that we have an obligation to be thinking about how we spent that. That's all. I'm not in favor of it.
Liz, I wouldn't mind another explanation, just because I'm a little confused. It seems like a tremendous amount of money, and I'm not kind of echoing Councilor DeSorger's comments. I'm just a little confused when I understand the stabilization for capital expenses, but we know what our schedule is. So I'm a little confused what we would use the stabilization fund for.
Okay, so this schedule is for the next 14 years. It's funding the aggressive schedule that we have to fund is for the next 14 years. It has some aggressive increases each year. And so this is going to allow us to manage this as well as manage our capital improvement program during these 14 years, because there's just a few years in there that are very high. And so we would use it to offset, and it's sort of a one-time thing in that this dollar amount is spread over 14 years. And once we're done, if you look at that schedule, it drops a lot. It goes down from, if you want to look at the, here we go. The schedule from that says Greenfield Retirement System, you'll see where we're paying 11 million or 89.9% of that, 11,149,050. And when we get through these 14 years, it's down to 3.6 million. So this high rate, this high funding schedule is for the next 14 years before it gets reduced. And this is what the auditor talked about, some people shifting, once you get through the schedule, shifting the funding that you had for retirement to OPEB. That's just a side. But the purpose of this is so that we can think long-term over the next 14 years, manage our capital, manage our pension. And we have the opportunity to do it now. It will be looked at highly favorably by the rating agencies. And we have some serious bonding coming up with a library and a fire station. So this has a lot of wins all the way around by establishing this.
Yes, Mayor.
Had to get unmuted. Well, I support obviously Liz's explanation, but just the history of Greenfield is that it has underfunded its pension stabilization fund for many, many years. It goes back probably even prior to becoming a city and having a mayor. So I think I'm not going to say that we are playing catch up. I'm just saying that we are being wiser than we have been in the past to look forward and project out what we need to do to take care of the people that have worked for us for as long as they've worked for us. That's all.
Councilor DeSorger?
I obviously have no question. There are two people that are sitting here who are my friends who are retired. I have no question whatsoever about that the retirement needs to be funded. I just want to make that perfectly clear. We have a schedule for this. We have a schedule that we have been, when we know it, well, it's over on the couch. I'm not going to get up and get it, but it's every year we have it until 2035. I know what it is and what we have to put in it. It's part of our annual budget that we tax for. So I think that we have a choice. We could use that million to pay 1 million of that this year if we wanted to, or we could put it in. Well, okay. So we can leave some of this. I get that it's going to help with the bond rating to put things into stabilization. Okay, I'll be quiet.
Director Gilman?
I'm sorry, Jenny. So what you're not understanding is so many cities and towns are wrestling with the schedule because they can't afford it. So it's such an aggressive schedule that they don't know how they're going to pay it. What this does is allow us to manage our pension schedule, our debt, our regular operating budget, because there are some serious increases in the pension schedule from year to year. And when our 2.5 is only 800,000, you can see why this might present a problem in 1 year. If the pension goes up 700,000 and our 2.5 increase is only 8, it's kind of a problem. So this allows us to go through the next 14 years that if we reach one of those years, yeah, we might need 200,000 or 300,000 from this to get through this year. And the schedule ends in 14 years. So we won't be facing those aggressive increases. I don't know how, else. You have to look at the whole picture of managing the budget, just even say regular increases, health insurance, property liability, union increases, steps, debt increases, pension increases. When you put it all together, it has to be manageable. And this allows us, because this pension schedule is over just the next 14 years at this high level, it allows us to manage it.
I actually have 2 questions. Why create a separate account? Could it be in general stabilization? And how did you arrive at the million figure?
So I did quite an extensive analysis that I don't even think you want to see, because it's a very massive spreadsheet. So this is what I did. I took our 2.5 each year and new growth and came up like, this is how much new we get each year for the next 14 years. I took these increases in the pension schedule each year and increases in debt service from the debt presentations I've given you. I put it together and matched them up and said, what's left after our retirement payment increase and our debt service increase? And there's a comfort level you need to handle all your other increases. And there were some years where the comfort level wasn't there. And so that's where I went through and I added up all these years where I felt we would need some of this $1 million. And that's what I came up with. It was a thought out process. Believe it or not.
No, sure.
And we had the opportunity to do this. There won't be another year where we have, I don't think, 2 years of free cash in 1 year. And so, and the opportunity when we're trying to really address a lot of capital needs in the city as well. There's a lot of competing things going on. So this fund in itself allows us to manage it and move forward with projects in Greenfield, with regular expenses that we all experience, whether it's health insurance or property liability insurance. And so that's how I came up with the number. We have the opportunity now to do it. You also asked why a separate fund. And again, because some people have asked this, but with first of all, we have so many, as you know, capital, contract, general. If you're trying, it gets very hard to delineate what's what in the one. So if you're saying, oh no, we're saving this for capital, or no, we're saving this for contracts, but it doesn't mean that you can't revote as council with 2/3 vote to utilize it for something else. That option is always there. The The other thing I would say to you is another reason, not just pension stabilization, but the other amounts going into stabilizations, is that at the end of the fiscal year, the free cash is no longer available until recertification in a subsequent year. So in other words, if you want the free cash, if you want the funds available that are now free cash in the first, say, 6 months of fiscal 22, they have to go into a stabilization account or they're not accessible. That's another reason. I'm just giving reasons for other additional rationale for the financial order. Do you have a follow-up on that at all? Or did I answer it?
I think so. I'm just trying to understand. So the fund would be there to help the budget over the next 14 years to help us as that increment gets higher for.
Because there's a couple of years where it gets harder. And that's, again, with projections and everything over the next 14 years, but we all know, what we're planning in capital projects. We know what we're planning. We can see the schedule. And that's the point. And again, I will emphasize that many municipalities, other than the wealthier ones that probably have already totally funded their pension, struggle with how they're going to do the schedule because it is so aggressive. So they're all in the same boat with other communities in funding this.
Thank you. Thank you so much.
Yeah.
Do we have any other questions from counselors? I guess that means, are we ready for a vote? All right. So all those in favor, raise your hand. Those opposed? Abstain? So we have 2 in favor, 1 opposed. So the motion is, would we call that a mixed positive?
Yeah.
Okay. And at this point, that closes the discussion on that motion. We can bring Councilor Jarvis back and Councilor Forgy.
Thank you very much, Councillor Bottomley. You did a great job chairing. We'll have to make it a more permanent position for you. You did a good job. Thank you. Okay. All right, so let's continue on if we can. Councillor Jarvis.
Okay, I was just waiting for the dogs to stop barking.
Okay.
In order to appropriate from free cash in the amount of $500,000 to the general stabilization, order that the Greenfield City Council appropriate the sum of $500,000 from free cash to the general stabilization fund. A majority vote is required.
Is there a second?
Second.
Second, Mayo.
Okay. Okay, we have discussion. Anybody's thoughts on?
I thought this was great. I'm happy that that was going into free cash. I mean, that was going into, that the free cash was going into general stabilization so that it could be used for multiple of purposes that we might not expect.
Okay, thank you. Anybody else have a comment, concern? Okay, it's rather straightforward. So let's go ahead and vote. All in favor of this, aye. Indicate.
Aye.
Aye. Okay, any opposed? Any abstentions? Okay. It's a unanimous decision and it passes. On to the next one.
Okay, in order to appropriate from free cash the amount of $600,000 to the capital stabilization, Order that the Greenfield City Council appropriate the sum of $600,000 from free cash to the Capital Stabilization Fund. Majority vote required.
I need a second on that, please.
Second, Disorder.
Okay, thank you. Discussion.
Well, we certainly have capital projects coming up. I thought that was a good place for that. My comment.
Any others? I just wanted to ask Liz a question, if I may. As we appropriate the free cash into capital stabilization, I'm already looking ahead to the funding of capital projects. So I understand the method of what the attempt is and trying to do to help us out with capital projects and perhaps lessen the borrowing pieces that we may have to do on smaller capitalization projects. So my question for Liz is, do you know what the balance is in this capital stabilization fund at the moment?
Yeah, it's $682. We've depleted a lot of the stabilization.
Okay, good. Okay.
That's why I was like,
Okay, all right. Any questions or discussions? Are we having fun yet? Okay. All right. All in favor, please indicate aye. Raise your hands.
Aye.
Okay, good. It's unanimous. Okay, on to the next one, if you please, Councillor Jarvis.
An order to appropriate for free cash in the amount of $300,000 to contract stabilization. Order that the Greenfield City Council appropriate the sum of $300,000 from free cash to the contract stabilization fund. Majority vote required.
Is there a second?
Second,
Second, Bottomley.
Mayo.
Okay. Any discussion on this one? Any questions?
I have a question.
Okay, Councillor Sorga.
I asked this and I forget the answer that Director Gilman gave us. I think this is a great thing, and I meant to look this up. I apologize before the meeting started. Obviously, this is always needed. They're all always needed. But my question was, do we have a process for who gets this what? I mean, who gets this first when a contract is settled? Or is it just who gets their contract settled first? Because I remember that came up last year. And I think
it did come up, and honestly, because as you know, as I just mentioned, free cash goes away as of June 30th. So you can't, after June 30th, go back and say, oh, I wanted to put more in contract stabilization. The communication is not good on what people are negotiating, you know, and we have heard very little, even though we have routine meetings and have inquired on negotiations. And the mayor sits on school committee as well and has that opportunity and asks as well. So we put in an amount. I think the policy too, there needs to be better written policy, because I feel we almost encourage retroactive and contracts not getting negotiated on time. So I really feel a policy needs to happen to where there's pressure from both sides to get a contract done on time. So in terms of who gets it, it sort of is a first come, first serve. We don't know what the cost is to the contracts, and we don't know when they're going to be settled. So when someone settles, they come to us. We generally do the retroactive piece. For sure on the city side, we try to have our departments cover it. If there's not a need to take money from the contract stabilization, we try very hard not to. But some departments are just too small. In some departments, especially in, I want to say it was 2019, they were a couple years behind. And so it ended up being a lot of money. And somehow we got to get out of that cycle, because in 2020, council saw these big salary increases, but in reality, it was 2 years worth, because the contracts were so far behind. So anyway, there isn't a good process. I will be the first to admit it. We need to work on that and the communication surrounding that, and what the expectations should be. When you have contract stabilization, you're setting up kind of a cliff, because you have to be able to absorb the amount in the next year. So for example, if our 2.5 is 800,000, say, and you just voted $1 million increase that somehow has to get funded in the next year out of a one-time contract stabilization fund, you're in trouble.
Mm-hmm.
So there's got to be more parameters put in place on either the amounts of retroactive or what you can reasonably absorb in the following tax year, in the tax levy. And that's what folks don't understand, because our 2.5 isn't that much, in the scheme of things. When you're talking this pension, that's what I was talking about, all these things competing, and trying to manage it. You really need to think about these things. And I'm not saying also not to be fair, and not that you don't have to figure things out if something isn't totally correct in a pay scale, but it needs to be discussed, and funding needs to be looked at realistically.
And Councillor Mayo, did you have a question to ask? Councillor Mayo?
I do. Or it's more of a, am I on now? Can you hear me
Yes.
now?
Yeah, you can.
Okay. All right. This is more of a comment, because I used to be a president of a union, and I used to negotiate contracts all the time. I would say on the comment that Liz said that, we need to build in some sort of procedure, or build a better procedure as to how we can do this, so that we don't get so far behind. My thought to that is it takes two.
Yeah.
There's two parties in that room. There's one party that's asking for a contract. There's the other side is negotiating, hopefully negotiating a contract as well. I have been in many a contract where they're all the people in the room, for one reason or another, stall, and that process just sits there. So progress is not made towards settling a contract, and that goes on both sides. So I would agree that even being a union president, that it doesn't behoove my members to not or to not negotiate a contract. You have to be fair about it. Everybody has to be fair about it.
Yeah.
So it just I just want to say that it's very difficult to build a procedure around that says both parties have to participate. That's already usually in a contract that you negotiate in good faith.
Yes.
Okay, I'm gonna thank you for your comments, Councilor Mayo. I have this sort of odd question, if I could, for just a moment. So we put this into contract stabilization fund, and I'm thinking there's nothing there right now. Is that correct?
Yeah, it's
Mr.
kind of
Gilman?
like capital. It's $493.
Okay. I was hoping you were going to say 490,000, but
No.
okay. So I don't know if it matters, but I guess I need a bit of clarification on this. So this is to actually build up a fund that would be used to settle the contracts as they come out of negotiation bargaining, but it would be used for the first year of the contract, or will it go to, if there's something left over, will it
See,
go?
that's where we have to say what we can limit in the first year, because, and that's why we can't get behind in the contracts, because we can't absorb this in the tax rate.
Okay.
So, yeah, Mayor would like
Thank
to
you.
speak.
Thank
Yeah.
you. Any other comments, questions, or anything? Okay, so
Chris,
yes.
I would like to speak to this issue, but I don't want to take away from any counselor that wants to ask a question.
No, I don't see any counselor that's got their hand that's indicating they want to speak. And I'm sorry, Mayor, I didn't see you.
That's okay.
You're not
That's
on
fine.
the screen only
Yeah,
shows
no,
how many blocks.
yeah, I get it.
Thank you. Okay.
So I just want to support the notion that Liz put out earlier about the fact that we need to have a better written policy on how the contract stabilization fund is to be intended to be used. So take it from me that I will commit to doing that at some point in the next year. And I say that because what I have learned in 14-ish months is that there is a general feeling that, oh, we have a contract stabilization account, so we can just negotiate whatever contract we want. And that is not the intent of the contract stabilization fund. The contract, what you should be negotiating if you're negotiating contracts, regardless of whether you're doing it for the city or whether you're, any in one of the city departments, and I will tell you that we are involved in soon no less than 3 of those negotiations, and probably a couple more coming along behind that. Or whether you're negotiating school contracts. Again, don't ask me where we are in that one, but the point of that being that you have to work within your own budget first. You have to negotiate within what you can afford within your own budget first. And then if something should occur, or if there's some reason why you need to tap into that contract stabilization fund, it's there. It's not there for everybody to have a free-for-all and think that, oh, well, we can do whatever we want because we're going to be able to go to the contract stabilization fund. We learned that. We learned that lesson in 2019 that carried over into 2020. So I'm not sure how that policy is going to get written or what it's going to say, but I just want everybody to understand that the emphasis will not be on, it's there to support whatever you want to negotiate for at whatever point in time. I think whoever asked the question, is that for the first year or whatever? It makes a good, yeah, okay, Chris, it makes a good point, because probably it should be there for the back end of the contract, not necessarily the front end of the contract. When you think, okay, well, we've given a little more than we thought we would have to, but it's deserved, it's needed, it's what happened. So you have to be able to know that you're going to fund the first couple of years of your contract, and if you need to go to contract stabilization for the rest, then probably that's where you know that it's there. So believe me, our intent is not to ever go back down to $49.25. What? We'd like to have a little bit more in there, more gas in the tank. And not because we don't want to negotiate good contracts, it's because we know, as Liz has pointed out, it's all kind of related to one thing, and that is ultimately our tax rate and just what we can really afford. So that's my soapbox. I'm over it now.
Thank you, Mayor. I appreciate it. All right, if there's no more discussion, we'll take a vote. All in favor of the motion, indicate aye or raise your hand.
Aye.
Okay.
Aye.
All right. Any opposed? Abstentions? Okay, it's a unanimous vote. And we have one more, Councillor Jarvis. Thank you for your kindness, by the way, of doing this. We
Always.
appreciate it.
An order to appropriate from free cash in the amount of $25,000 to compensated absences. An order that the Greenfield City Council appropriate the sum of $25,000 from free cash to compensated absence fund. Majority vote required.
Thank you. Thank you very much. I need a second.
Second, Mayo.
Okay, thank you. Okay, we're open for discussion. And I'd like to lead that discussion, if I may. When I was mayor, one of the huge budget breakers was paying off compensated absences. And when people retired, according to their contracts, there are certain things that they could buy out or buy back. And it did. In some instances, we had to negotiate with an individual over a period of 3 years because we couldn't afford the lump sum payment. This means that included in that would be sick leave buyback, it would be vacation days, it would be comp time, it'd be a lot of other things. Now, that was then, this is now. I think some of these compensated absences, I think it's been tightened a little bit as to what qualifies. And I know that employees are encouraged to use their vacation time on a regular basis so that they don't end up with a bank account. However, it still happens. There's always an expense when people retire. And I think this is great. And I wish there was more that we could be putting into this because, like the contract stabilization fund, it's a start, but it's not going to be fully funded. I do agree with this. It makes great sense. It helps to stabilize an operating budget. So I will be voting in favor of that. I just wanted everybody to know that based on experience, there's a great reason why this should happen. Now, having said that and hogged up all the time, would anybody else like to make a comment? Okay, so we'll do a vote. All in favor, please indicate.
Councillor Jarvis.
Oh, sorry. Thank you, Mayor. Thank you.
That's
Okay,
I can see everybody.
It's been a long night. It's been a long night for all. I'd just like to echo a little bit of Chris's and let people know that understand that when somebody leaves, if they leave in the middle of the year, that this most of the time their buyback money comes out of the budget. Usually with money that's left in their salary line and stuff like that. But if they leave at the end of the fiscal year, there's no money left in the budget because you already paid them their salary, and it can't come out of salary anyways. So you find it someplace else in the budget for it to come out of, and usually it comes out of equipment and stuff like that. As with Chris, I wish we could put a lot in this, so the individual town budgets shouldn't have to absorb it. But it happens, and the people work hard for it, and it's kind of a twofold. If they don't use their sick time, they're not costing the city any money by filling the shifts or anything like that. So it's kind of twofold. It's kind of cost savings, and I don't want people to think that they get compensated 100%, because they don't.
They don't.
I don't want that feeling out there either. So I just a little bit of clarification, and I wish we could put more in this to kind of alleviate the pressure off the budgets, but maybe somewhere down the road when things get better, we'll be able to put more in it. Thank you.
Thank
Could I
you.
ask, Chris, could I, since we've
Yes,
been
go right
asking
ahead,
this,
Mayor. Absolutely.
what is the balance in compensated absences?
Uh-oh. I would think 0. Minus?
There we go. Sorry. It is on the order. The current balance is 46,901. So this will bring it up to like close to 72. So.
That's still, I think we still.
But you know,
need
there
more.
have been years. Councilor DeSorger had sent questions in that I sent out to be, and it was a couple weeks ago, maybe 3 weeks ago. There was a year when we lost a lot of department heads, 2018, and it was $129,000 worth of buyouts. Not insignificant.
Not insignificant, you're right. Okay. All right, we need a vote. All in favor? Aye.
Aye.
Opposed? Okay. Abstentions? All right, the motion carries unanimous. All right, everybody give me 1 second to get my paperwork squared away here.
Councilor Forgy, may I ask a question of of Director Gilman?
Sure, absolutely.
I mean, it has to do with the stabilizations.
Oh, sure, that's fine.
Just generally, before
Yeah.
we go to the next thing. So, if we put money in any of the money that we put into general stabilization, we could take that out for anything that we needed on a one-time basis. Am I correct?
That is correct. And actually, it's actually true of any stabilization with 2/3 vote. You can change the purpose. So it's just that you make a commitment when you pass it. You know, we want to set this aside for capital, or we want to set this aside for pension. But if needed, you can, with 2/3 vote, change the purpose.
Okay, so we are headed into our discussions. We've got two more items that I'm aware of. The next item is the authorization for the mayor to execute a straw conveyance agreement with 401 Liberty Street LLC for property known as 298 Federal Street condominium. We do have backup paperwork. Everybody should have that. It's in their packets. I guess I have a procedural question. I don't know if President Ricketts can answer for us. This is typed up in the form of a motion. Are we taking this up as a motion right now, or are we doing a discussion? I'm sorry. If anybody has the answer to it, I just need to know. Okay. Mayor, do you have any comment?
I'm not, I know it needs to be done because we need to get this project off our plate.
Right.
And finalize the agreement. That is, I guess your question is, it's not written in the form of a financial order because it's really not a financial order per se. It's written in the form of a motion. I don't think that's wrong. I just think that it's to facilitate the process of having it go forward.
Okay, thank you.
I mean, that's all I know. It does preclude me.
Okay.
MJ has been there all along, so if she has a better explanation for how it's stated, then I'm happy to have her answer that question.
MJ,
Yes?
is this a motion that we're doing right now, or are we, because it says city council moved that it be ordered. So I'm assuming that's a motion.
It's actually a motion that we're asking for the city council to take up. I believe it's in front of you as for you to make a recommendation to city council. Yeah.
Okay, thank you. All right, is there anybody who's willing to read that motion? If not, I will read it. That's not a problem. Doug? Would you like to read it?
Yeah.
Okay, go ahead, please.
The city council moved that it be ordered that the Greenfield City Council votes to authorize the mayor to execute a certain, quote, straw convenience agreement, unquote, by and between the city of Greenfield, 401 Liberty Street, LLC, East Hampton Savings Bank, and Commonwealth, LLC, and execute other documentation as may be required for the purpose of clearing certain deficits in the chain of title to the property of formerly known as the Lund Silversmith property in the city block bounded by Federal, Kenwood, Davis, and Northwood Street in the city of Greenfield. Parentheses, the land, comma, or close parentheses, the land was made subject to the condominium statute Mass General Law C 1883A and is known as 280 or 298 Federal Street Condominium. The straw convenience agreement purposes to clear the title deficits defects by first removing the land from Mass General Chapter 183A, executing and delivering a confirmatory deed to the city of Greenfield for the ballparks as shown on parcel 2 in Franklin County Registry of Deeds Plan Book 136, page 89. Conveying the remaining property to Commonwealth LLC, acting as a straw for the purposes of resubmitting said land to the Massachusetts Condominium Statute, Mass General Law, Chapter 130 or 183A, conveying the newly described condominium units to 401 Liberty Street, LLC, and the city of Greenfield, and then renewing the lease and option relationship between the city of Greenfield and 401 Liberty Street, LLC, as described in the lease and option agreement dated August 19th, 2015, of which notice was given in the notice of lease dated August 19th, 2015, and recorded in the Franklin County Registry of Deeds Book on page, 6821, page 345. Majority vote required.
Thank you. Is there a second?
Second, Jarvis.
Okay, thank you. Okay, folks, go ahead, Ed.
I have a friendly amendment to this, Chris. There was a couple of mistakes in the amendment, if I may.
Oh, yes, please proceed.
It said Northwood Streets. It's actually Norwood.
Norwood.
It has to be
Okay.
amended. So I'd make that as a friendly
Okay.
amendment.
Okay,
And also,
That's
there was
accepted.
a read a mistake where Doug said ball park. It's actually ball fields. Just mention it, clearing it up for the record. That's all.
okay.
And I think I need a second on my friendly amendment to get that word in changing.
I'll second your friendly amendment.
Okay. Any discussion on friendly amendments, or we just want to go ahead and vote it as a friendly amendment? All in favor? Aye.
I
Aye.
Okay, opposed? Abstentions? All right, friendly amendment carries. Now we're back to the, that's unanimous. Let me just, okay. And now we're back to the original motion that has been read and seconded. So I'm opening it up for discussion. We do have MJ here. She, I think, might want to give us an overview of everything that has been going on. Our mayor is here as well. And I believe Eric Turog is here as well. So these people are here to help us understand what this means and what's going on. So MJ, take it away. Thank you.
And thank you. And thank you for those clarifications and those amendments to clean that up. So we're here this evening asking that you make a recommendation to City Council tomorrow evening to authorize the mayor to execute some documents that would in effect wipe out the existing condominium that lays over that parcel and reestablishes a fresh commercial condominium with the transfers back to the appropriate people, with the ballparks being excluded from that. The ballparks will be separately retransferred back to the city. And the reason for that is the developer, 401 Liberty Street, is looking to enter into an agreement with Verizon to rent some space on the smokestack that is on the middle part of that parcel. And in order to do that, some questions came up about the clarity of the title. In doing that, just to give you some background on that parcel, I'm sure you're all very familiar with it, much more than I. And for that reason, I've asked Eric to join me tonight because he has a lot more history on the site than I do. But in 2001, the existing owner created a commercial condominium that included the Unit A, which is the showcase building, Unit B, which is the balance of the mill buildings on the site, which is where BHN and CSO are operating now. And then there were the ball fields in the Lunt fields in the back. When in 2014 through 2016, through some foreclosure, tax taking, and bankruptcy, what happened with that commercial condominium is that Unit A stayed in private ownership. Unit B came into the possession of the city of Greenfield, and the ball fields, it was believed that they were transferred to the city of Greenfield. At that time, the condominium, there was no, my understanding from what the lawyers have told me is that the ball fields were not released from being part of the condominium. So we're trying to clean up the ball fields clearly being out of that condominium, and also to clarify some other amendments and some other things that have happened on the front part of that parcel on Federal Street, where the Maori building, which had been in land court and that got resolved, is now officially part of that parcel. So the plan here is for all parties, the city of Greenfield and 401 Liberty, who own all those parcels together, to transfer them to a straw, which is a sort of an entity that can hold things legally for just a moment of time. And in transferring all this land back to that straw and all the legal encumbrances that go along with those ownerships, then the straw can then, holding all that legal requirements in their hands, can then dissolve the existing condominium that covers the whole site and recreate a fresh one, first carving off the ball fields and retransferring those to the city of Greenfield. And then the balance of the site will go back into a commercial condominium under a new name. And then all the mortgages and the leases and the obligations that are encumbered with that property will go on top of that also. So what we're asking permission for is for the mayor to be able to sign those documents that essentially hands over the property to the straw conveyance, to the straw entity, for a moment of time while the original condominium is dissolved, a fresh one created, and the ballparks retransferred to the city. And that will clean a number of sort of cloudy title issues up, and then we can move forward on this.
Okay.
Thank you. Is there anybody from the city, excuse me, that all besides MJ or the mayor, do you want to speak to anything at this point, or would you rather we just go ahead and ask our questions? Okay, so I'm going to open up the floor to anybody who's got questions. I encourage a full board participation for this. So,
Wow.
oh,
I have questions.
Councilor DeSorga, go right ahead, please.
I have some questions on this. So after the straw deed, it's going to go back that we will then hold Unit B and C, and 401 Liberty will then retain ownership to A. Is that the plan? Because what we're saying today is that we're going to put this into a straw deed. We're not exactly saying what is that I could read that was happening next. So that's my first question.
Yes, all the property will be conveyed to the straw. The straw, they call it the straw. It's an entity that can legally hold all of these properties together as one legal entity. And then when that happens, the straw will dissolve the existing condominium and then transfer the ball fields to the city of Greenfield, and then create a new commercial condominium on the front part of the parcel that will be Unit A, which 401 Liberty Street owns right now. That will be conveyed back to them, and Unit B will be conveyed back to the city of Greenfield.
May I follow up?
Oh, absolutely, please.
So then we are giving 401 Liberty, it will be clearly stated that they would then have all the liability for anything in Unit A. Is that correct?
They own Unit A as a condominium, so yes, they own that property.
So, I have my questions really are, I asked because was on planning board when this started. So one of the things that I just wanted to see what had been done on the buildings, and we were this was a brownfield, so we were gonna remediate the brownfield. And I was delighted when that was happening. And because I saw all the things that were there. And so one of the things that I asked was if I could just see the piece of paper that said it had all been cleaned up. And there wasn't really a piece of paper that said it was all cleaned up. And the last report is that there's still, it's like 95% remediated. I have read through hundreds of pages of this, but that there is still, there's vapor intrusions of TCEs into Unit B. And we put in something called, so that when they started seeing that, which we put in this sub something depressurization system, so that went away from the air that people breathe. Okay. And I have read through all of that, and it's better in C than we thought, because they started off by putting the I forget what that is, subcellar.
Yes,
Subslab.
subslab.
Subslab depressurization. However, you know, there's still some of that there, and we're continuing to monitor. So my first question is, we will be continuing to monitor those contaminants. Is that correct?
I'm going to ask Eric to speak to that, because Eric was managing the brownfields cleanup piece of that. So Eric, you're probably more knowledgeable than I am on that.
Yes, so Councilor DeSorga, that's a good question. The last report sent to Mass DEP is dated April 6, 2020. And what that report did was give the test results of all the air quality monitoring from the sub-slab depressurization system put in the building. And also it was for to note a permanent solution with conditions for the closeout of the site. Because as of right now, the site is not closed out under the Massachusetts contingency plan. You're right, we're about 95% remediated. We're almost there at the finish line. The permanent solution with conditions, the condition would be an activity and use limitation placed on portions of the property. That would restrict certain uses, for example, growing crops or certain types of residential uses would be prohibited based on the AUL. So some additional work has to be done for final closeout in terms of brownfields. Property has to be resurveyed to show existing conditions. And then the language of the activity and use limitation instrument would need to be typed up and filed, and then DEP would have the final say on whether it's closed out. But we're almost there. So the air quality and monitoring is not taking place anymore. The results of that have been sent to DEP for their analysis for the final permanent closeout.
May I follow up?
Oh, yes, go ahead.
I'm sorry.
No, go ahead. Go ahead, Jenny.
So we're not then continuing to monitor, because I've spent a lot of time. I mean, if we've monitored that, but it's still in the soil there, and some of the numbers were higher. And from everything that I read, it can continue to migrate from the soil, and the worst place that it can be is in a contained space. So the other thing that there's two parts that I just wanted to make sure that people were clear with, because I read through the authorization of use, and these were the first two things that it said: to limit current and future use to non-residential, require maintenance of building conditions that ensure a condition of no significant use. I have looked at the whole site remediation thing from DEP, and I think that the DEP was a different DEP for the past 4 years. That's just my personal take on the DEP from 2016 to 2020. I think it was a little less regulated. That's my personal bias on that. But what I looked at was that we had monitoring. We have monitoring wells, soil samples, air samples that end at if you're standing at the ball fields looking at the building with a smokestack, it's on the left side. It's on the left side, like the Norwood Street side. And I remember when we first were looking at that for planning board, I remember another planning board member remarking, there was a dead tree there. So it appears to me that the monitoring stops from the whole plan, from the DEP. It stops just at the part of where we're looking at. I'm not good at screen sharing despite a lesson, but it stops around, BHN. That's where we're looking at it. And the places where it was the highest was the corner, that left corner, and a corner where it abuts Unit A. And that's what I wanted to say. I think there's what I wanted to say.
Okay, I have a question for Eric, if I may. Eric, if we go back to the beginning of all of this, who is the environmental owner of the site?
Right now, Bruce Nicholson from OTO in Springfield is our LSP representing the city of Greenfield.
Bruce Nicholson?
Bruce Nicholson.
Okay, so that person is charged with the site overview, but they actually represent the town of Greenfield?
They
Is it
represent the city of Greenfield.
City of Greenfield? I'm so sorry. So it's fair to say the city owns the site. Is the remedial owner? Is that a correct statement?
The city is not a responsible party for the cleanup because we took it by tax taking and bankruptcy court. So we are not in the chain of responsibility for cleanup.
I see. Okay, that's interesting. So it's up to Bruce Nicholson? Is that Nichols?
Bruce Nicholson.
Corporation or a business or whatever?
Bruce Nicholson is an LSP from the firm OTO, Oaken, Talcon, and I forgot what the other O stands for, environmental firm out of Springfield. They are representing the city of Greenfield as their environmental remediation specialists.
Okay, thank you. I get it. Thank you. I get that now. I wonder if we could just back up a little bit. I have some confusion about, I understand the concept of the straw deed. I understand what the attempt is to do this, but I wonder if there could be a little bit of history given because I know the property was Luntz, it was factory, it was manufacturing. So I know it's considered a brownfield site. When everything started to happen with the, I'm guessing, I don't know for a fact, the purchase of the building by the town of Greenfield, or the building is taken in tax title by the city of Greenfield. I want to know which, I understand there's like 3 condos. There's unit A, B, and C. Is that correct? And that one of the condos has the chimney, the furnace, whatever that piece of the building is. That's in C, or who?
It's not clearly associated with any condominium unit. If you look at and that's part of the lack of clarity here. It seems most close and adjacent to the west side of Unit B.
Okay. So Where is CSO right now in that building? Is that a condo piece?
Unit B and Unit C hold the BHN and the CSO programs. There are
Okay.
3 BHM programs. One is in Unit B and 2 are in Unit C. Unit C is the old Maori building.
Okay.
That's not there anymore, or
Okay.
that was demolished and rebuilt.
Right.
And then CSO is housed in Unit B.
Okay. Okay. What other businesses are housed in that building currently? Just 401 Liberty?
401 Liberty is the developer, and he is the landlord for those 2 buildings, Unit B and Unit C. There are 3 BHM programs and 1 CSO program, and that is it.
Okay. So 401 Liberty is an owner, but not a tenant?
Correct. They are the developer of the site, and the
Okay.
city leased the property to them, leased condominium B and C to them, and they sublet it to BHN and CSO to run their programs.
So we leased it to 401 Liberty, and what kind of revenue does that bring to us?
We get about $27,000 a year. It's probably a little higher than that as total annual rent, and that is it. There is the intent was that 401 Liberty would lease it from us and then clean up the site. They've spent I think just north of $900,000 cleaning up the site, and then do their redevelopment, make investments on the site and do the redevelopment, and then lease it out to subtenants. So 401 Liberty is the landlord. They lease the site from the city of Greenfield, and they act as a landlord to BHN and CHO for their programs and their units.
Okay, I have to think about it for a little bit. Anybody else have questions, comments, some more information? Great. Counselor
Yeah.
Bottomley.
So I'm still confused about what the current status of the ball fields is then. Does the city own that? I mean, it sounds like there was some attempt to separate that before. So, and also the second part of that question is, it's my understanding that those improvements that we expected them to do, they did not contribute to some of the ball field renovation that was supposed to happen. At least that's my understanding, but.
Okay. Let me take those 2 separately. First of all, the land was transferred, the ball fields were transferred to the city, but they were in the context of a condominium. So a trustee can't release a unit out of a master deed of a condominium.
Okay.
That's the problem. It's tied up in it's included in the underlying condominium, even though everyone's intention is that it's not any part of it.
Okay.
And then you had a question about the level of commitment for the improvements that were supposed to be made. My understanding is that was in the neighborhood of about $50,000. There was some improvements that were done. There was a check for $26,000 that was advanced, and then there were other improvements that were paid for directly by 401 Liberty to honor that $50,000 commitment.
Where does the trustee come in? Because MJ, you mentioned trustee doesn't have the authority to act. What I'm trying to, I guess my knowledge of real estate and business transactions is extremely poor right here. So I am really trying to understand who owns what. So help.
It's been a lesson for me also, Counselor. So a trustee, when I mentioned the trustee, it's the trustee of the condominiums. When there's a condominium created, there are a few unit members that are identified as trustees, and they actually are the ones who manage that condominium. They might also, they usually are the owners of the property also, but sometimes they're investor owners, sometimes they're actually on-site owners, but they are the ones, the trustees are drawn from those who have a legal ownership interest in the condominium units. And I'm not an attorney and I don't even play one on TV.
I appreciate that.
I just want to be really clear.
Counselor DeSorga, did you have a question? You had your hand up, I saw.
That Unit A, which is the octagon-shaped building, that's owned by 401 Liberty, and they must be leasing it because it's the Department of Transitional Assistance. But they own it. So that's what's happening. In there is the Department of Transitional Assistance.
Correct.
Employees, yes.
Mayor? Here we go again.
It's not that hard. It's actually fairly simple what we're trying to do here tonight, I think. And that is to at long last put this project to bed. So there's nothing worse from a real estate point of view than a cloudy title. So what we're asking to do, I think, is really just to take the steps that are needed. And we've paid an attorney to sort through all this to get us to this place. I wish it were called concrete, not straw. We'd probably have a much better level of confidence if it was, but it's not. And so I guess all I'm saying is the city of Greenfield wants to retain its interest in the ball fields, which this does, and we want to be, in essence, out from under the ownership of the rest of the property. And if I'm not mistaken, I think that's what this accomplishes. I'm going to correct that. It does not release us from the ownership of the property at this moment. We're clearing the title so that we can get to that soon. Yes. Yeah. So there's nothing worse when you try to go consummate the final deal than to have a cloudy title. So this is the step is to uncloud the title. And, I'm going to defer to the lawyer that this is the best way to do it. And so that's what it is. It's all the rest of that has been settled, I think, with regard to who cleans what and so forth and so on. And I think Eric provided the answer to that. It's 95% clean or someplace in that number. And that's a good thing. And so what we're allowing is for the rest of the process to move on so that we can finally relieve ourselves of this.
Mayor, quick question, and then Councillor Bottomley, you're next. Is it costing us money?
Well, I didn't look at the legal bills, but I'm guessing yes.
Oh, just legal bills. I guess my question is, why is this title not clear in the first place? Because, well, okay.
No, I don't have an answer to that one. Don't ask me.
Well, I understand it, and it's perplexing, but that's like what has, I guess I'm getting, I'm just wondering if these things have happened already and not on your watch.
And I don't care about that, but
yeah, but why are we redoing all of this? What was wrong in the first place, or what happened so that all of these things, quote unquote, fell through the cracks? No. Okay, my question doesn't need an answer. Councillor Bottomley, go ahead.
I'm sorry, it's so confusing. So you're saying at the end of this, when it's all done, Greenfield will own the land, or will 401 Liberty own the land and the building? Like it's really confusing. Like, are we still leasing the land to them when this is all over?
at the end of the straw conveyance agreement process, the city of Greenfield will still own the buildings and Unit B and Unit C. We will also cleanly and separately own the ball fields. We are moving to the place where we will sell and transfer the land that we hold with the buildings on them, the Unit B. We are moving forward to transfer that land to 401 Liberty. We had been waiting for the environmental cleanup to be substantially complete. One of the steps we need to do as we move forward in that transferring of the land to them is make sure that they've honored their commitments in the original lease to purchase option, lease with the option to purchase, which I sent out to you. And then the third piece is that we have to be able to deliver a clean title to them. And because of some of the things that have happened, both the underlying issues that have been at play with the commercial condominium, and also the secondary piece is the Maori building, because it was in land court, was not formally part of the original condominium because it was in land court. There was some question about its status then. That got resolved last year, so it is cleanly on our property and in our ownership. And so that this is part of clearing the title so that when we get to the closing with 401 Liberty, we are confident that we have a clear title to deliver to them.
Counselor Jarvis.
Unmute. Once I find the unmute button, I'll be doing fine.
Okay.
I think just to clarify this dead horse, at the end of the day, when we're all done with this, we end up with a clean title that we can get rid of the property, make more than $27,000 a year, and it's somebody else's responsibility at the end of the day. It adds money to our taxes. We clear ownership of all the property, and we are done with this piece of property, and we keep the ball fields. Plain and simple, correct?
Yes.
Okay.
I have a question, MJ, if I could. 401 Liberty, did they receive any TIF consideration or any I'm not going to use that word. I'm going to use did they receive any concessions from the city of Greenfield when they purchased this condo?
As part of the lease to purchase agreement, we are working with 401 Liberty to recommend and to implement a special tax agreement. The TIF committee made that recommendation to City Council in December 2019. And we started moving forward to finalize the special tax agreement, the final agreement that gets executed, and that has to come back to City Council for a final approval before it moves forward.
So that is still at play at this point?
It was voted and the TIF committee made a recommendation to City Council. City Council accepted the recommendation. We started to move into start creating the language, finalize the language in the agreement to bring it back to City Council, and we've been working on that. Then we were in the process of gathering the details in terms of the finalizing and certifying the investment that they made in the property, the number of jobs and the level of wages that will be paid in payroll to the new employees and the retained employees on the site, and some language around if the property were to be sold, looking for some consideration for a pilot if it's sold to a non-taxpaying entity. So those are the things that we're working through. Clearly, as we started to collect the income or the employment data and set up a reporting format for that, COVID came to play with us, and so that sort of created some mischief, but we're now on track and starting to get serious about creating the final details of that agreement, which I hope to present to City Council later this spring.
Mischief is a good word.
Yeah, that's good. That is good. Anybody else have any more comments, questions, concerns? Anything they'd like to say or bring forward? Okay, one more thing I would like. Oh,
I'm
go ahead.
happy for clean titles.
I'm sorry?
I'm very happy for clean titles. I think that's a great idea. Having a clean title, I don't have a problem with that. I just wanted to make clear that, again, that what my concern, and I thought only because I was looking after ours, first of all, that is something that I'm sure the mayor will be looking after, because that TCE vapor intrusion is serious, and that we are only monitoring it in B and C, and that again, in the corner of B that abuts A, that's the end of the line. There are no monitoring wells, there's no internal air, no soil samples, nothing that's being monitored on that site that I can find. So I just have a level, of course, of discomfiture with that, because we actually put in something to try to remediate that, which is not done. And the other, which is right next to that, where there are people who are working. And before we had the sub-slab depressurization, there were people that were called out on a 2-hour immediate thing because it was so high. And that's all I'm going to say. But I'm in favor of clean titles. And I know, I look on the Registry of Deeds, there are 4 pages on this with all kinds of agreements. So certainly it is a messy procedural thing as far as legal goes, but that is my comment.
And anybody else want to weigh in?
Eric.
Eric, go ahead.
Yes, I just want to address Councilor DeSorger's last statement about the environmental issues. I just want to make clear to everybody that DEP, at our LSP, Bruce Nicholson and OTO, we've been very transparent with Mass DEP from day one on this entire site. They are fully aware of everything that's happening at the site, who is occupied there as tenants, what we have done for testing, and the test results. They've been giving all that. They're quite aware of where we're at, that we're 95% clean. They are waiting for the permanent solution to go forward, which is part of that is the activity and use limitation. Once we do that, we've met everything under the Massachusetts contingency plan, and DEP be very happy. So they are aware of everything happening on the site. There's nothing there going on that they are not aware of.
Thank you.
Can I follow up on that?
Absolutely.
And DEP, actually, I agree with Director Twarog on that. They are. And they looked at it right up until the part of what we were doing, which was building the part that we were doing. But I mean, if you dropped a gallon of milk, it doesn't stop where we draw the line. That's all I wanted to say. I certainly think that DEP and that we were up front. I have no question about that. But that's it.
I have a sort of a quick two-piece question. When did you know, this has all happened very, very fast. When did you know that this had to be done? And why why does it have to be done so quickly, I guess is the question. Why couldn't we have had a chance to review it at one month before? That would be my question.
Right. I will answer that. I know that I heard from 401 Liberty in September of 2020 that they were looking to do this. I put them in touch with our attorney because I knew there would be legal documents. And And it wasn't until December that they actually were in touch with our attorney. And I believe it was after he reached out to them and said, is there anything going on with this? Because he knew he was getting busy. And they finally did get some documents to him in early January. It took some time to review them. And then there was, when the documents, after we reviewed the documents, we decided that there needed to be some sort of protection for the city. So we asked that they develop a process so that became to be known as the straw conveyance agreement to protect the city's interests. And that took a little longer to negotiate. I do know that 401 Liberty is very interested in getting this title issue resolved so that they can enter into an agreement with Verizon to start using the smokestack. In our minds, quite honestly, I don't want to call it housekeeping because it makes it sound too light, but it is, there's no real change that's happening here with the documents that we're executing except to clean up existing legal documents and to make it easier to move forward, both on our part in terms of delivering a clean title to 401 Liberty when the time comes, and for them to be able to work with the part of the parcel that they own, which is everything, the Unit B section. They actually lease it from the city, so they have the right to enter into other agreements in terms of how to use that land, and that they're interested in executing that as soon as possible. So that's why we asked that it be considered as quickly as possible so that we could get this out of the way so we could continue to move towards the finish line, which is transferring the land to them eventually.
Thank you very much. So if there is no more questions, comments, if we're all set, we have got to take a vote and make a recommendation on the motion as read. So having said that, I will close discussion at this point. It's going out to council tomorrow night. It's on their agenda. They'll address it regardless of which way we vote on this. So I will ask, all in favor, would you please raise your hand and say aye?
Aye.
What if I got 1, 2, 3 in favor? Any opposed? I have 1. Okay. And any abstentions? I have 1. Okay. Well, we're going to get to discuss this tomorrow evening. This passes, but it is a split positive vote, and this will go back out to council tomorrow night, and we will talk about it again. So thank you all very much. Thank you, MJ. Thank you, Eric. Thank you, Mayor. We appreciate this very much. It was a good discussion, and I'm really glad that we had it. So thank you again. All right, our next order of business will be, and I don't know if Liz is still on here to help advise us, but we have to start setting up a schedule for budget meetings. And I know that Liz, some of you have been through this last year. You were through this. The schedule is usually a schedule of 8 weeks in which the mayor presents her budget to us, and then there is an opportunity for Ways and Means to talk to individual departments. Usually groups. We usually group them together at night. At night at our meeting, and we also would probably need to take up the capital projects as well. So, is there anybody who would have an issue with a certain night? So we'll know not to set up the schedule on a certain night. This is going to go for the next 6 weeks, folks. So at least, maybe even
Thursday
longer.
nights are busy for me.
Which nights?
Thursday.
Thursday nights. Okay. So no Thursday.
Third Wednesday.
Okay. Wait a minute.
Third Wednesday, good.
Okay. Yeah, well, we all have third Wednesday, right? Third rock from the sun, third Wednesday.
I will just say this, if I may.
Yeah,
We have been told that the school committee never stops meeting.
yeah, okay.
Forever. And I have no idea when and where it's going to meet until the day or 2 or 3 or 5 before it. So all I can say is my priority is the budget for the city of Greenfield. So I'm willing to, I don't have a opinion on this. I also am involved in department head evaluations going forward, but those will take place in daylight hours. So as long as your Ways and Means meetings are in the evening, you know, whatever it's 5 or 4:30 or whatever, I know what the fire station building and the library building committee meetings are, and they begin at 4. Oh gosh, it's a little late, I can't tell you, but they are I think the fire station, which right now is the focus, is second and fourth
Yeah, it's just
Thursday of every month, starting at 4 p.m. So I would, if you could shy away from any 4 p.m. meetings, that would be good. That's all I'm saying.
Okay. So I'm wondering if a solution to this might be to do them on Tuesdays. Now I know that will conflict with some other meetings and everything else. We could do it as part of our regular schedule as well, and then we could make a schedule that we meet consecutive Tuesdays if you'd like, or every other Tuesday if that would be better. But I just wanted some consensus with you so that I can set up a schedule and we can run it by the mayor and Liz, and we can get it back out to you as to what we've decided to do with our meetings. And even our regularly scheduled Ways and Means meeting, depending on the amount of business we have, we could probably do some of our budget pieces at those meetings as well. Tonight was very unusual. We had a lot of business on our plate tonight. So if that's agreeable with the
Tuesday works for me.
Second Tuesday, I have economic development, and other than that, I'm good on all Tuesdays or any other night.
Okay.
And Tuesdays also.
Okay.
I believe last year they were mostly conducted on the normal Tuesday, meaning, you know, this one before the city council, but I can't verify that.
Okay.
If we had
All right. Well, I will work on that, and then I'll have Tammy send an email out to everyone, and we'll put a schedule together, and hopefully we'll get through it. We always do. Anyway. Okay, that was a very long meeting, everybody. I appreciate everybody's input, patience, and your participation. So our next regularly scheduled meeting will be April 20th, 2021, 5:30. It will be at Johnson Community Center or via WebEx if that's still required. I will accept a motion to adjourn.
so moved, Jarvis.
Second, Mayo.
Okay. Meeting is adjourned at 8:19.